The internet has become hyper-focused on the global money supply chart, guaranteeing continuation to brand new all-time highs again. I've seen this offset chart just about everywhere online. However, nobody is focused on the one chart that could start to signal nothing crash-worthy, but perhaps a mild pullback this week. I'll give you the bottom line up front, it's semiconductors. We do have another short holiday trading week, but it's loaded with economic data that will tell us more about the labor market, something the Fed is watching very closely here. So welcome back to the Trade Brigade Weekend Show, where we'll take a look through all of the data points and we'll build a logical trade plan. My name is Matt, and if you're new here, hit the thumbs up button and subscribe. For additional resources, check out the links listed down below in the description, and stay tuned until the end of today's show. I've got 7 additional trade ideas to share with you that you won't want to miss. With that said, let's jump right into the charts. So we'll kick things off on the SPY monthly time frame chart, and of course Monday is the final trading day of the month, but even if we were to pull back, I would still expect a close up here in the upper third of the monthly range, resulting in a solid green-bodied bar. That's of course bullish from a structural perspective. If we're thinking about location on the bar-to-bar count, a very clear higher low, as well as a higher high, and a close completely outside of and above the previous month's range, and perhaps, depending on Monday's session, a close in blue sky territories. Location also strikes me as being bullish. Don't listen to anybody online who's going to start drawing these terrible pictures of, oh my god, it's a monthly double top, the market's going to crash. Don't listen to them unless they're also telling you that the lower low is only brought in when and if we breach the tariff turmoil volatility lows from April, which, as we know, tied in with this previous area of resistance as well. That's 480. If we were to breach to a lower low, then sure, I suppose we do have a monthly double top. However, I would think that the odds favor some sort of potential monthly higher low well above the April lows should there become some sort of monthly pullback from the all-time high, basically. Let's move it on down to the weekly time scale here. Let's take a look at candle structure and location. So structure, very similar to the monthly bar actually, solid green-bodied bar. However, this is definitely closed. We did close up here towards the highs of the weekly range, so buyers are in control structurally. Bar-to-bar count in terms of location does offer a lower low, which is important. We'll talk about why in just a second, as well as a higher high and a close completely outside of and above the previous week's range. So buyers also are in control from a location standpoint. The low is important because if you recall, one of the ideas on the weekly timescale was the possibility of look above and fail. Now, we talked about in last Saturday's update video how none of the supporting evidence charts really favored any sort of major breakdown, but it just goes to reinforce that idea. Because we did breach the previous week's low, you would think if sellers were going to try to make a stand in the market, breaking a previous week's low should have unlocked further downside, and it just simply did not take place. Obviously, the market closed in very bullish territory up here at blue skies. So for now, sitting on the highest high of the weekly trend count, let's just take that completely off the screen, the highest high has to be bullish, and even if the weekly chart were to pull back here, it is a-okay to spot a weekly higher low somewhere either over these previous highs of these bars. I would still argue that if the daily trend is going to flip to down, we could support over the top end of the 3-week balance range. Heck, I know it would probably be uncomfortable for a lot of folks, but we could still close the China gap down here and offer a weekly higher low, recalling that the daily trend never flipped to down here. Daily trend never flipped to down here, so this is a soft higher low, this is a soft higher low. You could set a firm higher low on the weekly time scale at the China gap close, which is closer to that 570 area. If we come in here with the Fibonacci's from the bottom of April up to the new all-time high, the Fib 38.2 is still in that area, reinforcing the idea that this would technically qualify as bullish consolidation. If we come in here with the anchored VWAPs on the weekly, you'll notice that really the top end of this part of the cluster is stacked right around that same zone, close to that 570s China gap fill reversal area. The weekly 50 SMA, that's the blue moving average, is stacked in there as well. If you anchor a VWAP to the China gap up session, technically that did act as a little bit of a launch pad for this previous week's move in the upward direction. So all bullish from an anchored VWAP perspective. But if we take a look at the volume profile here, let's zoom out for a second and let's take a look at the top end of this high volume node. If we hover our cursor right about here, all I would point out is that the top end of the high volume node is sort of right at the highs of the last 2 previous red bars. So if the weekly chart pulls back, offers that higher low and bounces, it would make complete and total logical sense. You can also see that here on the daily time scale. Let's start by evaluating this week's expected move. If you're not familiar with the expected move, it is this gray box right about in here, and you can check out the video tutorial in the top right hand corner on how to set that up. If we're contained by the upper bound, the number's at 622.46, obviously implying a brand new all-time high, a higher high in the trend count. That is bullish. If we're contained by the lower bound, it's 607.36, implying a massive higher low in the daily trend count as well. well. So bullish across the board on the monthly, weekly, daily expected move. The daily trend, of course, is in the upward direction. This undoubtedly is the highest high in the trend count. We have equal lows from here. That's the China gap up. Basically, this is a soft higher low. This is a firm higher low. The hourly trend did flip to down. You can see that we have highs, equal highs, higher highs, higher highs. What does that mean? Even if the market were to pull back, just like the weekly time scale, a higher low can be found on the daily chart, which would preserve the trend in the upward direction. The line in the sand that I would start to use is honestly this gap close here. This is the ceasefire gap that's on Tuesday morning, basically. So $600.50 is the line in the sand that I would use there, and that would still qualify from here to here, right, as a possible higher low. The ideal higher low, though, would be even higher than that. It technically would not test the ceasefire gap. We would really use previous resistance as possible newfound support, something that would look like this. Again, it's not the end of the world if the ceasefire gap does close. You would then start to become bullish on something that would look like that, with a possible higher low back above 604.75, trading for continuation into at least the equal high, if not blue sky territories in the upward direction. Now, when we're trading at all-time highs, generally what we want to look for is just any big red flags across the supporting evidence charts that would suggest, hey, hang on a second, the market's not going to continue here. We don't really have that, and we'll go quickly through the supporting evidence charts. And again, the next sort of caveat with this is whenever we're trading the blue sky territories, we oftentimes talk about pullbacks first, just because those are the only reference points that we have off to our left now. It doesn't mean that we need a pullback. It doesn't mean that the market must pull back. Obviously, upside continuation takes care of itself. We should have an upside bias here with the trend and the breakout in the upward direction, but there's just no reference points to really talk about there. So that's why we talk more about the pullback and preparing for that situation. It doesn't mean, right, one of the base cases here would just be consolidation over the previous all-time high, continuation in the upward direction. Possible targets come from the options market, right? These forecasted moves, 622.46 would be the Friday, or well, technically it's a shortened week, so the end of week expected move there. If you wanted Monday's expected move, it's about $4 here. Tuesday's expected move, 538, so on and so forth. You could continue to reference the options chain if you're interested in that type of thing for upside, but because that's the base case, upside continuation or higher low pullbacks, let's just kind of rip through some of these charts here, a little bit more quickly. I guess we could go to the hourly chart, get a little bit more nuance, then we'll talk more about that semiconductor chart in just a moment. So one thing I'll call out is just the liquidation break from the afternoon session on Friday. I honestly wasn't even at the screens, but just looking at this action, to me it would seem very clear that the buyers got a little tired here up towards the all-time highs, and the reason I call it a liquidation break, and we could classify it as a liquidation break, is because the market basically retraced 100% of that move. Ask yourself the question, if we had stronger sellers getting involved with the market, don't you think on a pushback underneath the previous all-time high, stronger sellers should have been battling for something that looks like this, right? And it just simply didn't happen based on Friday's close. Now, it doesn't mean it can't happen, and one of the situations and a passing idea that we could be concerned with for early on in the week is just consolidation that looks like this, and then a Brigade bolt underneath, something like 613, 612.25, then probably starts to seek a pullback to the lower edge of the weekly expected move, which is a nuanced level from Tuesday's high and Wednesday's intraday consolidation. And then beyond that, it's that first major key higher low attempt on the daily time scale for something that looks like this off of 604.75. So if we get a pullback, this is one of the perhaps paths that could yield that pullback, and I would be interested in a quick scalp short, something for like risk reward like this to the downside, and then really changing tone aggressively back to the bull side at 604.75, something like risk and reward back up towards the equal high on the daily time scale, right? So that's what we're seeing here. If we throw on the anchored view apps intraday, any confirmations, let's take a look. Not really, I would say. The anchored view apps from the gap up on Tuesday, kind of floating along in no man's land. I suppose depending on time of week, if we do get consolidation here, the anchored view app catches up. Maybe that acts as the next launching point in the upward direction. You could also build the argument, I know we didn't really talk about upside, and once again, it's just because we don't have reference points, but if you get consolidation here, the Brigade bolt is up and over Friday's high at 616.35, unlocking blue sky territories and continuation in the upward direction. Perhaps this anchored view app starts to go sideways depending on how sideways the price action is here, and could offer confluence closer to the lower edge of the weekly expected move at 607.36. 607.50 is the technical level that we have in here from the Tuesday high. That's really it on pullbacks and confluence. We could technically come in with the Fibonacci's as well from the bottom up to the top. Notice that your 61.8 is the gap fill reversal down here. That is the ceasefire gap. As we know, 61.8 is always the line in the sand. The more time you spend under the 61.8, the greater the odds of a 100% retracement. So we would want to avoid that if we are trying to lean bullish here. It is kind of interesting that the 38.2 is almost confluence with that lower edge of the weekly expected move. Once again, 607, give or take, right around in that zone is where we are looking for a first substantial reaction if the market pulls back first. We could technically come in with one more Fibonacci from here to here. This doesn't really tell us much, honestly. The sort of golden zone, if you will, in here, it's kind of in no man's land from a price action perspective, so I wouldn't really focus too much on that. Let's jump into our, these are the market internals. If you're not familiar with the market internals, check out the video tutorial in the top right-hand corner. Generally, once again, the main idea here is, do we have any red flags? No, I don't see any red flags. Again, if stronger sellers were really going to get involved on that Friday afternoon, should have closed volume flows red, should have closed the advanced decline line red, didn't happen. The index score got mildly red on the pullback, but closed green technically. Same thing here in the tick. You get some pretty substantial negative ticks, but then rebounding back to the zero line. The cumulative build did close red, but once again, just ask the question here, do we have substantial sellers stepping up at the exchange level? No. If we did, volume flows would have looked like this. If we did, advanced decline line would have looked like this all day on Friday. The cumulative build would have been like the inverse, basically, of the Thursday session, but in the downward direction, right? And we just don't have that. If we take a look at the market profile for the ES, one thing I also find very compelling here is that the value area is towards the upper portion of the range. If we did have stronger sellers stepping up in that afternoon liquidation break, you would have expected value area to shift lower here, point of control to close weaker, and it just didn't take place. So as you can see, here's Wednesday, here's Thursday, here's Friday's value continuing to move in the upward direction. You can see that we do have a lack of material excess at the all-time high, so that's something to carry forward. I would expect a repair of that poor high, just meaning that if we test the all-time high, we should be looking to go through it, and then it becomes a question of, okay, do we accept above, and do we sustain blue sky territory, or is it a quick repair, and if we come back into range, that would be a little bit more of a concerning signal for a possibility of a short back down towards those pullback levels we were just describing on the Spider's cash. Let's quickly take a look through the QQQ. It's going to be a lot of rinse and repeat here. Let's just throw it up here on a monthly time scale. Clean drawing set, perfect. This is the Spiders. Let's take a look at the Qs. Let's go clean drawing set over here. Thanks for bearing with me. What do we have? Solid green-bodied bar. Again, we still have Monday's session to close out, but very likely that even if there is a pullback, it's still going to close up here somewhere in the upper third of the monthly range, complete higher low as well as a higher high, and a close very likely either in blue sky territories or at minimum just completely above and outside of the previous month's range. So bullish on that. Very similar to the ES, or I should just say the S&P 500. You can't really call this a monthly double top unless you were to break underneath the neckline, which is way down here, closer towards that 410 area, same confluence of the previous pivot high out of the NASDAQ as well. You'd need to be underneath April lows. So don't listen to anybody online calling for a major monthly double top. I would say if we do pull back, the odds would favor some kind of higher low to be sustained prior to the possibility of a massive trend reversal on the monthly. If the monthly trend does reverse, that's typically when things start to get very dangerous in the market, and we'll of course call that out, but given the look of the chart currently, I would think there are lower odds of that. Let's take a look at the weekly time scale and continue to move through the times here. We do have ourselves solid green-bodied bar, minimal upper wick, minimal lower wick. Same concepts as the S&P 500. We did break to a slightly lower low, clearly a strong close on a higher high outside of and above previous week's range, brand new all-time highs, the whole 9 yards. The push to blue sky territories is a little bit more meaningful here out of the QQQ NASDAQ. That's primarily because of the strength we've seen recently in the semiconductors sector or industry, you could say. If we take a look through the Fibonacci's, obviously we have a weekly uptrend here. We're sitting on the highest high. You're still getting confluence at the China gap close at the 38.2. You've got your weekly 50 SMA here in blue. This is the highest high. If we were to pull back, again, it would feel uncomfortable. There's plenty of shorts to trade intraday, intra-week for something like this, but you would still yield a weekly higher low in the grand scheme of things. You could even make the argument that that's the monthly higher low we were just sort of drawing over on the higher time frame chart there. Let's quickly check in on the anchored view apps for the QQQ. You can see we're above the entirety of the stack and also used the China Gap Up anchored view app as a launching point for last week's bar in the upward direction. Quick check-in on the volume profile, which as we know is one major high volume node relative to the S&Ps, which were not quite the same. you're completely launched up and over it. So there's really not much to talk about here from a bear perspective. You need to fail back down underneath a majority of these reference points should the market start to develop any sort of stronger pullback, which in the introduction, I know I said we could see a pullback, but very, very mild. We'll talk about that SMH chart in just a moment here. Let's get back down to dailies, QQQ on the daily chart. First things first, weekly expected move, as we typically do. Let's just put this front and center on the screen. There you have it. So expected move is here. The upper bound is perfectly at 556. This is kind of crazy. We had 548.09 expected move for the week. If we go to the Qs and take a look at July 3rd, look at that. 791. So right to the penny, basically. 556, the round number. They're following rule number 1, or rule number 2, I should say, up in the penthouse office. Then at the bottom end, we have 540.18. So just like the S&P 500, higher high, higher low. No issues with that. The best thing to watch here would be if we do pull back and support over the previous all-time high, 541. Technically, it's 540.81 if you want to be precise to the penny. But for now, this is A-okay. Something that looks like that is clearly a higher low in the daily trend count. This is the highest high we've just set, of course. If we do come underneath that level, there's probably a little bit more of a short opportunity to do something that looks like this. Lower high underneath the previous all-time high, tests the top end of this previous range here, and the top end of the ceasefire gap. That's at 536.25. If we do pull back deeper than that, your line in the sand for a higher low here is at 532.20, right? And that would be from here up to here, offers you your higher low. So picture perfect is just consolidation, continuation over Friday's high. If we do get a deeper pullback than that, hardly deep, it is but a surface wound, but something along these lines, 541. If we do drop 541, you could probably start to look for some interaction off of the ceasefire gap and then start to trade these outcomes in the upward direction. Higher low back above 536.25 and higher low back above something like 541. If we take a look at the hourly time scale here, we could check in on our anchored view apps intraday, completely above the stack. This is slowly going to get there for Confluence at the previous all-time high, 541, 540.8. If you prefer the more exact number, this in here gets a little bit interesting at 543.50. You could start to use these levels if you're more of an intraday operator, right? You would just be watching for possible outcomes like this, I would think. Oops, let's get that off. There we go. So consolidation, Brigade bolts to the upside take care of themselves. Something that looks like this. Again, thin structure retracement here didn't really happen on that Friday liquidation break. Stronger close back inside of the midpoint of that Friday range. So still doesn't strike me that stronger sellers are here. If anything, a consolidation pullback that looks like this, I mean, heck, you could even just look for that to act as the higher low, right? If you do get a little bit deeper, once again, that 541, and then you could just walk down the levels from there. It's really not a lot of technical nuance here when we're just blasting off the brand new all-time highs. We could come in with the Fibonacci's from the low up to the high and see what's going on here. Fib 38.2, just sort of tucked in at the 541, 540.8 level. This zone, generally speaking, will be a top priority watch for that possibility of a daily higher low. The DHL shipments are back, and that's the number we're watching for. Let's clear that up. We could technically come in from the low end here up to the top end as well. 68.1 is a little bit better confluence here out of the NASDAQ than what we saw over in the S&P 500. Let's check in on our NASDAQ internals and see if there are any red flags here. Remember, just a quick scan when the market's in blue sky territory like this. A quick scan quickly reveals there's really no bearish build here on the market internals by any stretch of the imagination, even on that breakdown from the Friday session. So we'll move along to the market profile for the NQ, and we'll check out where value closed on that Friday, just like we did for the ES futures. What do we see here? Just trying to make this a little easier on the eyes. There we go. Value undoubtedly progressing higher. Here's Tuesday, Wednesday, Thursday, and of course Friday even higher than the Thursday session. The point of control is definitely more towards the midpoint of the range, but it's still above the entirety of the Thursday range, so I would still argue that buyers are in control here. The one thing that you might want to start watching out for, and this holds true for the ES as well, the S&P 500, if value starts to build slightly lower, whenever value is slammed towards the upper portion of a range, it just means that buyers are technically getting involved at slightly worse trade location. You can think of it as a, the profile here is a little bit top heavy, you could say. It's going to be easier to knock that over if you start to spend more time underneath and in this chunk of action here. All of these buyers start to feel like this if they were buying the all-time high, right? So it's easier to develop some sort of pullback the more time we spend underneath something like value area low, for example, which in the NQ futures is close to 22,660, give or take. If you're to take a look at the, just use the Thursday range relative to that, if you start dipping a toe into Thursday's range, again, you just have trapped overhead supply here. It might be easier to develop some sort of pullback. So if you want the equivalent level over on the QQQ, just use your Thursday high, which is going to be right around 546.25. The more more time the market spends underneath that, the more likely it is you have trapped overhead supply. And lo and behold, that's the exact situation we just talked about like this anyways, where that's where your pullback starts to develop. So all set from a technical confluence perspective with the market profile. Let's take a look over at our IWM Russell 2000, the small caps here, monthly time frame chart. We'll kick things off, clean drawing set, just to get a sense for what's happening. Generally, there's a lot more relative weakness on the IWM, the small caps. We know that. Still, candle structure-wise, we do have that solid green-bodied look here. It's very likely we close in the upper third, rinse and repeat of all the other comments there. You can see the higher low on the bar-to-bar count, higher high on the bar-to-bar count. That does look good, but clearly it's not even close to all-time highs. So it's got a lot of work to do from that perspective, and I would still be open-minded to the possibility of a monthly lower high. There's nothing saying that the Russell can't lag here, the other components of the broad market. And one of the ways to interpret this too is just that a majority of companies that are going to be like the heavy-hitting names, you could think of names, Circle's IPO, CoreWeave's IPO, Uber is a recent IPO, Reddit, all of these things basically jumped through the phase of being small caps, right? And instead, they're just like immediately these big mega cap companies that exist out there in the world. So you don't really have that pipeline of companies that's going to support better growth here in small caps. It's just sort of like continues to be smaller energy companies, regional banks, some biotech, medical stuff, right? You don't really have that opportunity for massive growth in the pipeline on smalls anymore. So if this just lags into a range, I would not really be shocked about that. So one thing to call out is that this is still technically a possible higher low, but really from here to here, it's a lower low. So you're really just range bound on the higher time frame IWM. Let's take a look at the weekly time scale, see what's going on from this perspective. Remember that this kind of head and shoulders neckline in here is kind of what we're up against, but we also want to be respectful of this area, which we are using, support. We're staying above the top end of this 200 figure, the weekly 200 SMA as well. That's the green moving average in here. Really no issues from that point of view. The next thing that we would really care about is whether or not we can really move more substantially out of this range here. We are trying to stay over, as we know on the daily chart, it's quite clear, this inverted head and shoulders neckline. I like that the market closed higher here on better volume, but notice that we did not take out and close above the previous pivot high from back over here. Not the end of the world, and still progress in the upward direction, but just not as strong as it could have been. And once again, I still think that this is kind of an issue as we start to resolve this previous level from off to our left, off in the past. Let's take a look at the Fibonacci's from the bottom up to the top. You can see that we're well above the Fib 38.2. So even if we do pull back, is this all weekly bullish consolidation? Technically, from this perspective, you get weekly bull flag. As we know, if we come in from the all-time high, we're still struggling with that 61.8. As we just talked about, the technical level is being reinforced there. If we come in from this to this, notice that we're over the 61.8. This would be ideal. Like if you think of this in terms of steps, what's the next step for the Russell? It's got to stay over this 61.8 and eventually make it for the 100% retracement, which would then inherently put it over this Fib 61.8 as well, right? So if you get to this 100% retracement, then okay, any pullbacks want to stay over this 61.8 and make it to this 100% retracement. So you're just going to try to start walking those things up if we're bullish on small caps, which in my view doesn't really make the most sense to be a huge mega bull in small caps, given what we just talked about in the company pipeline. I mean, maybe with rate cuts all throughout 2026 into the end of 2025 here, makes a little bit of sense to make it back up towards the highs, but is it like this huge outperformative bet? I don't think so at this point. You're above the entirety of the anchored VWAP stack, which also sort of stacks up as a bullish data point. If we come in here with our volume profile, you can see that we are starting to get into the bottom end of the high volume node here. If you were to count this kind of as a high volume node, we're at the bottom end, which once again aligns beautifully with this technical level in here, closer to the 216, 217 mark. Let's see that a little bit better on the daily time scale. Oops, we want IWM. There we go. You can see it's this mark right around in there, 218, 215, 85, this previous area of resistance, daily 200 SMA is stacked up in there. If we just stick to the plan though, stick to the script, if we remain congruent in the analysis, what do we see relative to the weekly expected move? It's still bullish here. The upper edge is at 219.85, higher high in the trend count. Lower edge is at 211.25. That of course would be a higher low as well. So bullish from an expected move perspective here. We are in an uptrend with, lows, higher lows, higher lows, higher lows, along the way as well, highs, higher highs, and this all ultimately is a very nuanced higher high, although the close was not very compelling whatsoever on that Friday session. Very indecisive here on the daily structure. Nonetheless, any consolidation that remains for a higher low over that key level we just described, 211.25, which is the top end of this balance range from off to our left, still looks good. It's a stair step in the upward direction, if you will. The next step would be something that looks like this. Brigade bolts over 215.85 for continuation, hopefully up through that weekly neckline we were just doing battle with, as we saw just a moment ago. If we come in on the hourly chart here, what do we see out of the more nuanced price action? If anything, this is sort of just a nice higher low, very, very liquidation break-esque on that Wednesday session, right? Only to be bid right back up Thursday, Friday. So all set from that point of view. The one thing I would just make note of once again is if this daily 200 SMA, this 215.85 is going to offer a struggle point, any consolidation here starts to signal a little bit of look above and fail on the prior high, and you just be looking for your next hourly higher low here. You have lows, higher lows, need to see a very nuanced higher low here at 212.85 if we were to remain bullish. If we start to get underneath that, the hourly trend neutralizes, and then you'd just be a little bit more hesitant about your daily higher low hold of the 211.25 mark that we were just describing. In terms of the intraday anchored VWAPs on the IWM, you're above the entirety of the stack. That checks out. That looks fine. No issues from that perspective. If we do consolidate up here and get back over 215.85, that's where I'd just be looking for continuation in the upward direction. We could come in with the Fibonacci's because why not? From the lows up to the highs, what do we see here? No man's land. I'd say maybe the 61.8 telling us that once again, this 211.25 is a key line in the sand. And if we come in from, let's come in from here to here. Not really getting much. I would just say that we want to get over the Fib 38.2, which is the key technical level anyways, daily 200 SMA, 215.85. If we're above that, a little bit more comfortable from a breakout perspective from this balance range off to our left anyhow. Let's clear that up. Let's take a look at the Russell market internals, see what's happening from this perspective. Any red flags? Again, let's just keep it high level here. Absolutely not. No red flags, no major bearish divergences. We did close a little bit weaker, so it's not a shock to see weakness here, a little bit more weakness here, a little bit more weakness here out of the cumulative build as well. Let's come into the Russell market profile. Let's take a closer look at this. And once again, not a shocker here to see a little bit of relative weakness. The value area and point of control lower in the individual profile market point of control is centered in the market profile distribution here. What else? Other nuances to pay attention to. The value is also lower on the Thursday session. This really goes two ways, right? Because you can think about it from this perspective where the value down here, these buyers are still happy, right? It's the inverse, basically, of the NQ that we were just talking about and the ES that we were just talking about. Buyers are still happy. If we're over the midpoint of Friday's range, most buyers will still be happy. Versus if value is up here, yes, it's commitment at higher prices, but it's also, hey, this profile is a little top heavy, and any time we spend underneath offers a deeper pullback. So all set from that point of view. I would argue it's really neutral here. Out of small caps, I'd be hard pressed to say anything overly bearish about it, but it's not firing on all cylinders like what we see in the S&P and the NASDAQ. So let's get into some other, any red flags really through the supporting evidence. We'll keep it brief through this. Weekly performance of the sectors shows us that semiconductors lead the charge here, up 7.15%, absolutely on fire in semiconductors, followed by communications, which is now the fourth heaviest weight sector, the tech sector, the heaviest weight risk on sector, 4.32%, discretionary, financials, all the heavyweight sectors outperformed the S&P 500, which is bullish here for the risk on perspective, pushing these new all-time highs. If we take a look at the bottom end of the barrel, it's energy collapsing on the ceasefire deal, of course. The real estate sector down 1.08%. That's a little bit defensive anyhow. Staples underperformed here. The TLT underperformed. Really not seeing any defensive posturing. So once again, the idea is let's quickly look for any red flags. The only red flag that I start to see in the semiconductors ETF is we are coming into the previous all-time high, and the market is running out of a little bit of momentum, right? Obviously, we've seen gap and go. We've seen a gap fill reversal on the Thursday session over Wednesday's high, but are we seeing those strong momentum closes at the high of day? Are we expanding range? Are we seeing solid green-bodied bars? No, it is starting to slow down a little bit, which is in the introduction what I was talking about, right? If there's one thing that's going to potentially offer a little bit of a pullback here, it's this week. It's the fact that this breakout from the range. It's more than doubled the balance range. It's coming into a known area of resistance. The momentum is clearly slowing down. It's not an, oh my God, the market's going to crash type of pullback. But if semiconductors take out this level right here at 275, I would not be surprised in the slightest if there's some give back to offer the next possible higher low over 264.75, or if the market just sort of comes in like this and starts to build out new bull flag consolidation sideways up here, it is going to put a small damper on the momentum in the upward direction out in the S&P 500 or the QQQ all up. So that's the big call out for this upcoming week. It's just a slowdown in momentum out of the semiconductors ETF. Not the end of the world, but possibility for a slowdown broad market wise, considering that this has really fueled the move in the upward direction. Let's again start looking for any red flags. Any red flags here? No. Brand new all-time high break, great momentum, clear higher low opportunity over 105.60. No issues on communications. Similar story over here on XLK relative to the SMH. A little bit of a red-bodied bar there on the Friday session. If it does pull back, plenty of room to close and repair some of these gaps underneath us and then offer a higher low. It's not a red flag, but it does start to indicate, okay, if the market's going to slow down, this is an early warning sign of that, with the technology sector opening on a very subtle gap up on Friday session and then yet closing inside of the Thursday range. So carry that forward. As we look at the XLY starting to break out of the balance range here, let's see if Tesla and Amazon can really pull that forward. That, of course, would offer rotation for the broad market. If the XLY discretionary sector can Brigade bolt out of range and get continuation, maybe the market can absorb a pullback in the SMH and the XLK, and this will just fuel the market higher anyway. So watching the XLY here very closely at 217.65. Let's take a look at financials. They look great here, breaking out, making a move over these previous highs. Remember that the threat was this for a double top back over here. Never broke the neckline, and instead gap and go here has actually taken out the pivot high. So still bullish on financials. If the banks are doing well, then the market's doing well. Let's take a look at industrials. Pushed to new all-time highs. Plenty of room for a Brigade bolt higher low there. No red flags. Materials look fine. Taking a move back out of this previous balance off to our left. That's great. It's a lightweight sector. We'll really call it out when it makes a new swing high over that area in there in the daily 200 SMA. XLV has done absolutely nothing. It's stuck in the mud. There's really no trades to be had in the healthcare sector right now. Looks neutral right at the midpoint. So you could carry that forward, but it's been demoted. It's been aggressively demoted to the 5th heaviest weight sector from what used to be the 2nd heaviest weight sector. Isn't that incredible how quickly that has sort of turned around here in the XLV? So no longer as important for the marketplace as a whole. Utilities, this is defensive. It's stuck sideways in a range. It's still technically trying to build out bullish structure over 80.25. No red flags there. The TLT bond, slow grind in the upward direction as rates start to come down a little bit on the forecast and the premise that the Fed will be responding to a sort of weakening labor market. We'll talk more about that in just a moment. XLP sideways in the range here, no red flags, bouncing off of that 80 mark, which is what we talked about in the past couple of videos. Energy unwinding back to the unaffected price of the whole Middle East conflict, basically a non-issue here. If energy is not really spooling up and offering inflationary pressure up and over the 95 handle, no issue out of XLE, so we'll move along from that. And real estate, as we know, slightly more defensive. The one thing you do want to pay attention to here is just the relationship of lower rates and mortgage demand. If real estate falls off of a cliff and rates are also coming down, that would be a little bit of a red flag. I wouldn't say we're fully at that position yet, but it is something to continue to monitor. We could also look at the XHB, which of course is home builders. Notice that we still have our 2 alerts. When and if we break this range, we will learn something about the market and its sort of reputation, or rather just strength on the cyclical side. Breakouts here are bullish, should continue to reinforce new all-time highs. If we break down, a little bit more of a red flag, but as long as technology is picking up the slack, not much of a concern there. Let's quickly look at our ratio chart, see if there are any big glaring red flags out of the sector ratios. If you're not familiar with the ratios, check out the video tutorial in the top right-hand corner. This is bullish. This is starting to turn. I'd say it still needs work to do, so we'll go neutral there. XLF still needs work to do. It's underneath a downward sloping 50. This looks great. We've rebalanced the XLC. Here's the 4th heaviest weight sector. XLV getting demoted over here. Risk off is not a concern. Risk off is not a concern. No red flags. It still strikes me as bullish and risk on posture. You're 6 for 6 on this risk on off ratio grid as well. Everything pointing in the upward direction. No issues there. If we look at the B set, similar story. This wants to be moving lower. It tells us that people are not rushing into gold as a defensive asset. If we look at Bitcoin here, really interested in this flag breakout back towards blue sky territories. We did get a green flip in the Sailor shift tool and the TLT ratio to the S&P rolling over, also indicating a stronger risk appetite for equities there. As we look at the dollar and interest rates, Breakdown here in the dollar is actually fairly interesting. I was going to think that an oversold bounce here possibly puts some downward pressure on equities. It's still in play, but you would clearly need to see a break back up and over something like the 97.75 handle on the Dixie. If you do get that move, just be prepared that that could also align with a pullback in the equities market. Watch your SMH as and if that is taking place. So actually, I'm going to go ahead and set an alert here. Let's do that together. At or above 97, let's just say, let's type it in. Let's go 97.75. If we're over that level, I certainly want to be aware that the dollar could be offering downward pressure to equities. Interest rates slowly dribbling lower. Again, we talked about the premise with the Fed there, and we could see that as well in the inverted ZT, slowly moving lower. Expectations of a rate cut have dramatically increased, and we could see that here in the Fed tracker tool. There we go. We've got about 81.4% odds of a pause in the next meeting, but that's not what we care about. What we care about here is the fact that the market's now pricing in 3 rate cuts into the end of 2025. Here's 1, here's 2, here's 3, and then we have 4 and 5 into 2026. I would expect that we get more than that, and we start seeing at least 3 additional rate cuts priced into the 2026 timeframe also. So add one more here, perhaps a year out from now in the July timeframe. So we'll watch out for that. But generally what this starts to tell us is that the Fed is, or the market's perceiving that the Fed should be starting to cut rates a little bit more, or thinking about cutting rates a little bit more aggressively, considering what's happening with the labor market. If you take a look at the calendar this week, it is absolutely loaded with economic data. Monday, we get a little bit of a reprieve, but that's the only day where we're in the clear. Immediately on Tuesday at 9:30, as soon as the market opens, Powell is also going to be speaking on a panel, I believe, at the ECB forum there. So it will likely have some degree of Q&A. Be mindful of that. So market volatility on Tuesday morning. We get the 10 o'clock ISM manufacturing PMIs, jolts at the same time. That's going to be just another barrage of volatility. And it doesn't stop there as we move into the Wednesday session. ADP non-farm at the 8:15 timeframe. And then Thursday is just, my goodness, I don't think I've ever seen a calendar as loaded as this. You get your average hourly earnings. So the full Monty labor report is getting pushed from Friday, which as we know is a holiday, to Thursday morning during the half-day trading session. Average hourly earnings, NFP, the unemployment rate, the month over month, the initial and continuing jobless claims, and PMIs coming out around the 9:45 and 10 o'clock timeframe, respectively. Just a very, very busy day on Thursday. So speaking of the jobless claims, one of the things we should take a quick look at over here, let me just throw this in a full screen chart. Let's go, continuing claims is what we care about first. And let's just throw that in here. Let's go to a monthly. And let me make this a line chart for us. Oh, where's our settings? Should have had this pre-built perhaps. Let's go to a line chart. It's fine for now. And let's go to as many years as possible. There we go. So what we care about here, and let's just get rid of those moving averages. There we go. Beautiful. Thanks for bearing with me. What we care about on the continued claims is the subtle breakout, actually. And actually, we have weekly chart here. Yeah, we have weekly chart. That's what we're looking for. That's the money shot right there. This breakout of the balance range is something that we care about, right? Because continued claims likely start to translate to the true month-over-month unemployment rate. And we've seen a substantial move higher here. What we haven't really seen a substantial move higher in is the ICSA, which is the initial jobless claims. And we could set this to a multi-year chart like this. What we're trying to illustrate on this one is we, of course, talk about the 250 breakout mark often on the channel, especially on those Thursday mornings. But really 260 is kind of the number. If you're not over 260, then I don't think that there's a reason for the continued claims to accelerate as dramatically as perhaps the breakout might signal, right? So if we just go back there to continued claims for just a second, this looks like a very scary breakout, but without these continued support, no pun intended with all these continued terms, without the continued support of initial jobless claims, I would think that this starts to neutralize up here. The only thing that's kind of a small red flag on this front is that the JOLTS number is coming down, right? And I don't know if we have JOLTS pre-configured as a chart, do we? No jolts over here, but that's all right. Let's go to the unemployment rate, and you can see here that we've been pretty stable around the 4.2. I would not be shocked by any stretch of the imagination if this comes in hot and either signals a 4.3 or a 4.4, right? If we go back to this, the forecast right now is for a 4.3, and that would make sense given what we just saw over on this chart with the continued claims starting to break out. So all things considered, I think the Fed is in a position to start considering cutting rates more aggressively. I know that they're trying to hold out for the tariff inflation, so to speak, but even the PCE report on Friday of last week sort of tells us that, yeah, there's some mild inflation there, but it's nothing really That's causing this spiral to the dreaded like 3% plus mark that the Fed was really scared of, or Jerome Powell continued to spout out as a major concern in his FOMC press conference. So that is that. Let's take a quick glance over at the earnings calendar. Oh, wait, there's nothing to talk about here. Let's move back on over to the charts and let's take a look through the continued supporting evidence, and we'll finish this thing off on a strong note. Bonds still signaling the same exact thing. Lower here, higher odds of a rate cut. Inflation still a somewhat concern on the long end of the curve. No red flags. If we take a look at credit spreads, no red flags here. Ideally, this starts to roll over, though, just a little bit. If we take a look at HYG, so junk bonds breaking out in tandem with the market, no red flags there. If we take a look at breadth, and we'll just drop this to a 3-month daily chart, you could see moving higher here on new highs versus lows, higher and higher into the end of the week. You could maybe still make the argument that, okay, it'd be ideal if this broke back out over these local highs. We haven't done that yet, but it's not enough of a concern where I would say, oh my God, let's short the market into the ground, especially noting that if we look at the RSP, we did actually start to break out over these local highs into the end of last week. So the more time we can spend over 180.15 on the RSP, the better for the broad market breadth. Let's take a look at volatility, a non-issue out of the VIX. If we take a look at the VVIX, slight higher close on the Friday session. I simply think that that's due to weekend risk, headline risk over the weekend, people putting a little bit of a hedge on there. If we take a look at volatility futures, strong contangos across the board. No issues there from a money manager perspective. Same thing here. No issues out of the 9 versus 30 day, and even the 1-day VIX getting floored on that Thursday session, making the lowest low that we've seen since the tariff turmoil volatility. Let's take a look back at let's go to the core list of company charts. Let's rip through these. NVIDIA is going to kick us off, and a lot of the same story here is what we care about. Obviously, we have a breakout to blue sky territories. Previous all-time high is your ideal area of support. It's a classic trade. Everybody should have that in their playbook. If we do get a pullback to the previous all-time high and hold, we should be looking for longs off of that level. 153.13 is the number there. If we do come back a little bit deeper, this gap close from that's Wednesday morning. If we could get a gap close to that level, around 149.25, 148 would also be a great opportunity for a higher low on the daily time scale. Here it is on the hourly time scale. You could sort of see the consolidation. If we Brigade bolt underneath this level, 155, then you trap the overhead supply. That's where we get into the previous all-time high. If you're going to go deeper than that, your real thin structure retracement from this breakout on Wednesday is underneath 152. Underneath 152, that's your deeper pullback to get into this gap close area. Let's take a look, but generally all up on NVIDIA, the idea has to be bullish until proven otherwise, right? If you look at Microsoft, it's the same story. Brand new all-time highs up here. A little bit of a 2-day balance range forming on the Friday session. It's been a little bit of a tougher trader recently. If we take a look at the Friday action, you can clearly see the failed breakout at the top of the move here. So consolidation in there sort of signals look above and fail on the earlier highs and also just the highs of the prior session. Brigade bolt underneath 493 possibly kicks off the pullback, and maybe you could start to argue, if it looks like this and then this, you have head and shoulders. It's a possibility, but would I short Microsoft here? Not really. This thing has been a freight train in the upward direction. You want to step in front of that? Be my guest. I would just be waiting for pullback longs. On the daily chart, your best pullback long is just the Brigade bolt here on a weekly higher low, daily higher low, around the 482.25, 479.75 zone. Let's talk about Apple. There's really not much to talk about, but this balance range is still in play. The major level is 213, 193.75, so about a 20-point range there. If we're just in the midpoint, there's not much to do. If we crack the lows, I would start to be a little bit more concerned about a pullback in the broad market as a whole, remembering that even though Apple is boring, the chart sucks here, it is still the third heaviest weight company in the S&P 500. Let's take a look at Nancy. Amazon had a great day on the Friday session. Perfect gap fill reversal off the 217.75, breaking out of this balance range. You could call this a little bit of cup and handle action happening there. I would expect continuation in the upward direction for a day 2 of the breakout. So over 224, targets 228.75. Pullbacks from that level then are seeking daily higher lows anywhere over 217.75. If you look at the hourly chart here, you could start to see this, right? Here's your gap fill reversal, end of day push. You could start to say, okay, day 2 continuation looks like this. Pullbacks that look like this, hourly downtrend to get there, hourly reversal off of 217.75, that is your daily higher low. You want to stay over the top end of this balance range here. So seeking continuation first, and then pullbacks from here to offer a higher low. You could even get the higher low at 224. The daily structure would just be a little bit more concrete, if you will, around that 217.75. Let's take a look at Google. First, going back to the daily time scale. Google's chart's been pretty horrific in this range down here, so I'm a little less interested in trading Google through that. The more time it could spend up and over 177, the better. I would think that starts to become a little bit more bullish. The reason I say this is you had this higher high. this was a higher low relative to this, but then this was a lower low, and it's already made it back up towards this higher high. Google's story is sort of, in terms of AI search, losing dominance on search there for Google is not the best for the story of the growth of the company, right? They sort of have to reimagine their AI products and the suite of products that reinforce their dominance. So the technical structure via the lower low and just getting all sorts of sloppy through here, with this really becoming an issue in the headlines, a lot of people are talking about this, it just makes it a very sloppy trade, in my opinion, through this range. So all over the place relative to the daily 200 SMA. It can't really decide if it wants to stay above or below. Needs something better on the Google daily chart. So I'm going to be waiting patiently. Some stronger resolution over 177 maybe, but for now it's kind of put it on ice and look for something cleaner. Speaking of cleaner, look at this meta chart. Beautiful breakout over the 705.50 top end of this balance range here, straight into the all-time highs. Is it ready for a pullback? Maybe. You could see on Friday, really outside of the end of day push there, it was sort of consolidation sideways, not really doing much. It builds the argument that if we do Brigade bolt underneath to 726.25, it's possible you get a deeper pullback there. Your key daily higher low has to be over the 705.50 breakout point. So watching this very closely as your key level, and once again, that would be your daily structure, right? Brigade bolt over the top end of the range gives us a higher low to participate in back towards the all-time high. And on the second attempt, that's really where we look for it to go through, especially after a potential higher low. Let's take a look at Tesla. Tesla is kind of in no man's land. Really, I don't want to say disappointing because we hate to attach emotional triggers to certain stocks, but, undoubtedly, a lot of people, myself included, were looking for this 334 to act as support on the way back down for a possible Brigade bolt higher low here, and it just never happened. If you look at the hourly chart intraday, strong downside on that, the Tuesday session, right? Then followed up on Wednesday with this obliteration of 334, and there's take a look at 334 on the hourly chart. There's no sign of a lower wick there or anything. Look at the 15-minute chart. No sign of a lower wick there or anything. Let's take a look at the 5-minute chart. No signs of lower wicks there or anything. Let's go all the way down to the 1-minute chart off of 334. It's not even on the screen because we only have a day's worth of action. Let's go back here. Let's take a look. Maybe one minute hammer candle right here, but did you take out the high of the 1-minute hammer? No, you didn't. It was just immediately lower. So, 334 just had nothing going for it on that retest in there. If we go back to the hourly chart, in terms of the next trade setups, there's nothing to do at 323. There's nothing to do in the midpoint of this range. I would probably need to see a look below and fail on the moving averages if I'd like to see a long, something like that, 313.75. Or if it wants to get back over 334, we'll try it again in the upward direction. The only thing that this is reminiscent of is back over here, right? This sort of, in theory, should have had the best opportunity of support there. Didn't hold up. That's when Elon was sort of going crazy on X. And this is sort of a similar situation, right? Here's your overshoot, no support in here. If it gets back over the level, possibly it squeezes back into these highs here around 356. So one step at a time on Tesla, but really not interested in doing much towards the midpoint of that range, which is where we closed on Friday. Let's go back to daily charts. Here's JP Morgan just checking in on financials. Still looks good. All-time highs inside bar on Friday. So Brigade bolts to blue sky territories or pullbacks over 280.25. Keep financials in check. And that, of course, is bullish for the broad market all up. Let's take a look at Netflix. Swing traders rejoice. Anybody who's got Netflix in the long-term account, shout out to you guys. Just pumping out new all-time highs like it's nobody's business. Let's take a look at the hourly. If you're looking to reestablish a long entry, or if you're looking for an entry in general, your best outcome is something that looks like this. I would not be chasing the balloon up here towards the highs. Either you're long it already or you're just not, to me, it doesn't really make sense to chase it up here. So that's what I've got on Netflix, sort of swing traders rejoice. Palantir got brutalized on the Friday session, breaking back down underneath these previous highs. I think Palantir sets up the opportunity for, if this is just an emotional overshoot, something that looks like this probably offers thin structure retracement in the upward direction. The daily trend is still technically up with lows, higher lows, higher lows. These are sort of higher lows in here. Never had an hourly pullback, hardly had an hourly pullback. These, of course, are the highest highs in the trend count anyways. So from here to here, is it still possible you set some kind of daily higher low? Absolutely. It's just a matter of being very careful about the entry, right? You can't just buy this down here because the threat becomes something like this. If you reject this previous all-time high at 133.50, it's a great spot for a short, actually, something along these lines. However, I would think because we're still in an uptrend, because Palantir is one of those names, it's got that sort of retail resilience, if you will. If it wants to offer this, I'd be interested in thin structure retracement as a scalp into 137, the clear lows of the prior balance from here, as well as the lows before the afternoon breakdown on Friday. So that trade is available if we could get the Brigade bolt recapture, so to speak, over 133.50. Watching that very closely. Any consolidation down here is inherently bear flag consolidation, and then right, seeking downside continuation. This is pretty thin on the way back higher as well. So Palantir, it's all about 133.50. What side of that number are we on? And making the case from there. Broadcom, let's take a look at these new all-time highs. Let's go to the daily chart first, actually. You can see a little bit of a slowdown in the momentum here on the Friday session, really staying inside of the Thursday range, trying to take out the Thursday high, by just a hair up here, but then coming back down into range. So I think that this supports the SMH theory that the broad market momentum could slow. Any consolidation that persists over 264.25 continues to be, though, one of those textbook setups where this, that belongs, we'll put it in the history books if we need to, but Brigade bolt over previous all-time high should seek continuation in the upward direction. If we start to close below it, I'd still keep an open mind to a gap fill reversal off of like 253.75 on Broadcom, something that looks like this. I don't know that I would short it here. I would maybe be more interested in the short through the gap because there's literally no structure there. But when we get here, gap fill reversal, daily, higher low, DHL shipments are making a return. That's what we're looking for, 253.75. AMD is perhaps going to graduate back to the core list of companies. You can see that this has expanded here over the last couple of weeks. Look at this chart. Just would you look at it? Beautiful move in the upward direction out of AMD. It's no longer the advanced money destroyer. It is the advanced money. Someone fill me in on what the D should stand for in the comments section. We'll await your feedback, and then, of course, we'll trademark it, register it, copyright it, and then we'll get the lawyers involved if you tried to make a stand. What do we have on AMD? It certainly also looks a little bit more pullback-esque, right? Notice the slowdown of momentum on Thursday, Friday. If we take a look at the Friday bar, breaching the Thursday high, immediately coming back down into range. Very clear flush point here at 142.35. Under that level, I would start thinking about this deeper pullback into about 132.65 as a possible setup for the next long. If we get something that looks like that, clear spot for a daily higher low. Once again, DHL shipments are back in business. If we do get continuation in the upward direction just right out of the gates, I'd be very cautious of chasing this long into 150. Why? If you take a look off to our left, it is this major pivot high prior to the gap range that exists overhead. So one step at a time. I would just be very, very mindful of your trade location if you're buying it long up here towards that 150. Let's take a look at some of these additional ideas. First one's Coinbase. Everybody in the sister is watching Coinbase, but I don't think for the right reasons. One of the things is underneath this certainly offers a thin structure retracement. So 347.25, if you can break underneath that, notice how this is like hourly head and shoulders under the neckline. There is thin structure. What goes straight up can come straight down. We're looking at under 347.25 to 319.75, 313, this little consolidation before the second leg higher out of Coinbase. So watching that very closely. When it comes down here, certainly put your thinking cap on. There's the opportunity for a daily high or low around this zone. It's not an outright, oh my God, the Coinbase chart should crash and burn and go to zero. This is also it would be a failure back down underneath these prior pivot highs from, excuse me, off to our left. Let's take a look at Oracle as our next idea. You could see the alerts are set, right? If we're over 216.31, 216.30s, whatever, over these highs is blue sky territories looking for a breakout. This is a classic bull flag consolidation. As long as we're over 207.35, it remains in play. Here it is on the hourly chart. You can see how we looked below and failed. As long as consolidation persists here, this is the idea that we're interested in next. Getting long on the white dot, 215.25 is the watch. That's Oracle. Let's move along to ARM. ARM. Let's take a look at the daily chart. Excuse me. Getting towards the end of the video. Yes, definitely is. You can see that we've got this nice breakout from this balance range here, the recovery over the daily 200 SMA. If you get this consolidation, just notice, look at the daily, beautiful uptrend here. Look at the hourly, beautiful structure. Take a look at this, then this, then this, right? Nice push to the upside. We haven't really built out a new block in the upward direction yet. So if we do, 160 pullbacks get really interesting for longs back to the high. Or if we come below 160, very similar to Coinbase actually, you start to build out this head and shoulders underneath this, thin structure, close the gap, respect the top of this. Zoom in a little bit on that. Why bother squinting? This, and then longs off of this area. So longs down here, let's say L, and then this is possible short right at this dot, right? What goes straight up comes straight back down, and then we seek the daily higher low. Okay, so ARM, very interesting chart, very, very clean levels, and semiconductors, as we know, have been on fire recently. So all the watch, all the focus, the spotlight, if you will, of the market right now is on these companies. Let's take a look at Shopify. This has been in our sphere of influence as well over the last little bit. The thing that strikes me as interesting here is that the liquidation break into the afternoon on Friday really sets up the pie in the sky mosquito pattern. Typically, people are like, no, it's not an inverted head and shoulders unless it's on the bottom of a move. Well, it still implies the same thing. We have lows, lower lows, sellers fail. This is now a higher low. And if we can break the neckline, the mosquito, the proboscis, if we're over 214.75, 117 becomes the target, right? So I think that that's still in play, and this would be the idea to possibly watch for risk and reward in the upward direction. That's Shopify. Let's move along to Uber, another one that's been popular here among the channel, also just in the sphere of retail as well. Take a look at this thing, right? So there's many layers to the Uber chart, actually. Here's the weekly chart. We know that this was a beautiful Brigade bolt over the top end. So long-term shareholders rejoice. There's your sort of bull pennant over the key level. And look at the breakout this week. If you take it on down to the daily chart now, you could see almost the same thing starting to form, where if we could get some sort of like flag in here, support holds over this $89.90, $90 flat, this previous pivot high, are supportive for longs to continue in the upward direction. Here it is on the hourly time scale. Yes, you could build the argument that you have the possibility of head and shoulders here. However, considering the layers of analysis, again, starting from the weekly, then to the daily, then to this hourly chart, if we could support over 90, it still looks great for a possible daily high or low. As long as this gap remains unfilled, remember that gaps that do not fill support strength in the opposite direction. So this gap up supports strength in the upward direction here. So long as 89, 90, 90s are holding, I would maintain a bullish stance here on Uber. The daily chart did offer a nice looking hammer candle. A classic way to trade this would just be longs over the Friday high, get you into these local highs from off to the left. So watching to get out of Friday's range in the upward direction. That's Uber. Let's take a look at Robinhood. All the usual suspects here. Notice the 3-day balance range here at the tippity top of the move, cleanly up against 85 and 81.90s. Take a look at the hourly chart now. If you do pull back, fine. Not really looking for shorts here, but reevaluating at 79. Can we use previous resistance as newfound support, looking to pick up longs off of that level, or consolidation that just Brigade bolts over 85? It's not quite blue sky territories. Let's go back to the daily chart. Your next level overhead. Let's go to the weekly. I think we need max available. It's a newer IPO. It is. I thought that we were still in the upper wick of that previous bar. My apologies. So over 85, you've got nothing but blue sky breakouts on Robinhood. Love to see it. Another chart that is very similar to this, early stages, back down over here. This is something that you might want to put on your radar. This is not in the original 7 ideas, so this is a freebie for you guys. LMND, Lemonade. Take a look at this chart. Look at this long-standing balance range. Look at the breakout of the long-standing balance, higher low pullback above. If we can get over the IPO opening print here at $50.06, I know, weird, the 6 cents, but if you're over that, you could call it weekly cup and handle, you could call it whatever you want to call it. I'm not saying we have to go to the all-time high, but generally speaking, Lemonade would be a top watch breaking out of this long-standing base here from its IPO sort of collapse, if you will. These couple of years, it's been sideways. If it can pick up some steam, that's really where you're looking for it to reignite, so to speak, over the IPO opening print, $50.06. There's your freebie of the day. Let's get back to the final idea that I had teed up for you. It is CrowdStrike. CrowdStrike is another one that's been sort of a nice name to be watching recently. Let's go to the daily chart here. What do we see on the dailies? Inside bar on the Friday session, 502.75 is your top watch. If you can get over it, looking for continuation into blue sky territories, so long as the price is over 490, I would maintain a bullish stance on CrowdStrike here. Let's take a look at the hourly chart. You can see this. Here's your previous range. Notice the break. You got to get back over this consolidation, right? So the reason I'm not literally cherry picking the top end of the move is because you're still bearish slightly with trapped overhead supply so long as you're under 502.75. But if you can clear it, that's where I think the market starts to run again out of CrowdStrike and sees a move in the upward direction. That's all I've got for you in today's episode of the Weekly Watch List. If you enjoyed the video or learned anything new, let me know down below in the comments section or by giving the video a very simple thumbs up. We will be live every morning this week at the 8 o'clock Eastern time frame, as always, for another episode of the Pre-Market Prep. We'll have coffee and donuts, extra patriotic coffee and donuts on Thursday session for the full Monty labor report, jammed in with the initial and continuing jobless claims, ISM services PMI. It's going to be a loaded Thursday morning. Keep in mind, it will be a half day in terms of markets closing early at the 1 o'clock time frame, but it will be a good time nonetheless in the morning session. I hope to see you there. With that said, have a green trading week, and I will see you in the next one.